Hi, Cornelia. Thanks for attending us.
Hello, thank you very much, Ms. Kuyumcu.
Thank you so much. After OPEC production cuts, what is your assumptions for oil prices?
Well, they have gone up quite a bit. Earlier in the month, at March 20, they were at $70, coming down from 120 when the Ukraine war started, and they have come up. But have come up to more than to 85 for Brent and slightly above 80 for WTI. So they have come up. It definitely did have an effect.
Mm-hmm. So how does it affect the global inflation?
Well, OPEC, I think, did the right thing because they're looking at the global banking crisis. We've just had one of the 30 systemically relevant banks, Credit Suisse, going bust. So there is a global, and we have SVB going bust, and all sorts of companies, not banks not being able to go there. So they look at that and they say, okay, that has an impact down the road on consumption, on oil consumption. At the same time, China is recovering, but it's not coming out of the starts as quickly as we expected. So the mood music, so to say, is just much lower than we expected. So they took a preemptive step.
So do you expect a diversion in central bank policies? For example, Australian central bank halts rates for now.
Well, Australian central bank holds rates for now, but you have seen that the Fed went up. You've seen that the S&P went up. So we see that central banks are going up because inflation is going up. And yes, do higher oil prices result in inflationary pressures? Yes. But when I look at the 2 million barrels a day cut that we had in October from OPEC Plus, where everybody said, oh, this is terrible, they were right, because had they not done that, oil prices would have slid even further. So in terms of stabilizing the market, keeping them at a level field, neither consumers nor producers want oscillations that are too high because they're so hard to deal with. I think OPEC has done the right thing once again.
So you expect Federal Reserve to continue also?
The Fed will look at inflation numbers, but let's look at not inflation number does not equal inflation number. You have the CPI, the consumer inflation number, and then you have the core inflation number, and that strips out food inflation and energy. And that has been on the rise. Everybody said, oh, inflation has come down. Yes, it's come down for CPI. It's not really come down for the core inflation.
Also, we have seen the manufacturing data in the United States to slow. How about labor markets?
Well, I think labor markets are a real big effect because we have what we call sort of a labor shortage or a skilled labor shortage. The pandemic has put many people out of work, and getting them back into work at skilled levels is really difficult. So what we see here, I think, is you have the labor market shortage, and that has inflationary pressures, because if you have not that many people who can fulfill the skills that you need in a company, obviously you will have to pay them more. It's the matter of demand and supply.
And also, there are rumors Swiss central bank authorities defend Credit Suisse buyout by UBS. What do you think about it?
Well, I think that, needs must. And when you look at what happened with Credit Suisse, had the regulators and the government in Switzerland allowed the bank to go under, it would have resulted in a global financial crisis a la 2008, because it was one of 30 systemically relevant banks and there was big counterparty risk there. In Switzerland, Credit Suisse holds about 40% of all the loan portfolios of the SME, small and medium scale companies, which are the true backbone of the Swiss economy. And they were the big financiers of trade. Also, they hold a lot of the real estate portfolio, both commercial and private. So had they not done it, Switzerland would have faced a recession, according to my econometric model, of at least 2 decades.
Also, do you think all the risks are eliminated in banking sector?
Oh, no, they're not eliminated. And I would like to see a few things happening. I would like to see, and on the Swiss side, I would like to see board compositions to change. Especially with the mega bank UBS, I would like to see the financial regulator to become a little bit more nimble and on the case. Globally, what happened in the US was very different from what happened in Europe. Mm-hmm. In the US with SVB, the bank was caught on the wrong side of the interest rate cycle. In Switzerland with Credit Suisse, there was a lack of trust and people started to withdraw what they had deposited with the bank. So it was a classic bank run. So we should not confuse it. But I understand central banks when they have to go up with interest rates because they do have to combat inflation.
Mm-hmm. Okay, thank you so much, Cornelia.
It was such a pleasure to talk to you. Thank you very much.
Thanks. See you again.